take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Let's do this. Good morning, everybody. Happy Thursday. Welcome to the morning show. This is Stock Market TV. I'm Spencer. JC is here. Steve is here. You're here in the chat. What's up? Joe, Doug, Chris, James, Javi, Jonathan, Rudy, Josh, JR, whoever I'm not. Yosul, good morning, everybody. Before I roll the intro, maybe you do me a quick solid and hit that like button right off the bat, and then I won't even ask you to do it again. You do it right now, I won't even bug you later. How about that? We'll make a deal. Today's guest, Blake Millard, will join us to do a bit of a year in review type of thing, and that'll be about 9 o'clock. We'll have Sean McLaughlin to talk options on at 9:30, and that's what we got. We got the charts. You got the questions. We got the stuff. We got the juice. Let's go.
All right, Mr. Strazza. The Miami Hurricanes play football in Yankee Stadium today. Ain't that something?
2 o'clock. And who are you rooting for, Spencer?
Spencer didn't even know there was a game.
I don't have a rooting interest in games that don't involve my team. So
but you're a big Rutgers guy.
Isn't Piscataway, New Jersey, the capital of the state? Isn't that how?
What? No,
all the Jersey folks stick together.
Rutgers guys aren't big Rutgers guys.
Spencer's favorite football player is Ray Rice.
I'm going with a former defensive end from Rutgers coming with me to the game. Big guy. So I get into any trouble. Oh, I mean, he's a defensive end for Rutgers. He's not a little guy.
Okay, so who? Do you know what the line is?
Rutgers by 1.
Really? Wow.
What?
Well, Miami doesn't have a quarterback. So,
what time is it? 2?
2:15.
What time are you leaving?
The field goes from home plate to center field. It doesn't do. It's not third base. It's not third base line to right field. It's home to center.
I never understood football fields on baseball fields.
Well, it just depends on how the stadium is constructed, right? In this case, it's going this way.
So, full disclosure, I'm a little bit slow today. Somebody kept me up late last night. What's with these late night spaces? What are you
Tommy
doing?
calls me like at 9 o'clock. He's like, or like 8 something. He's like, you want to jump on a space? I'm like, not really. He's like, come on, say a few words. All right. Twist my arm, And then I was like, all right, see ya.
Are more nighttime spaces? Is that bull market data?
No, there's like a degen spaces that it's like a bunch of perma bears late at night drinking, and that's gone on this whole time.
I think I've been to that one.
Yeah, it's really depressing until I show up. Start dropping heat on them. Their heads are exploding. God forbid we ignore jobless claims and housing starts. Who gives a shit? They don't like it when I say that, but
when you left, we were talking about how the economists have got it so wrong.
Shocking.
And then Lund and I and Fahmy agreed. Who needs economists when you have the stock market? Has the stock market not got it right, and continues to get it right in terms of navigating and forecasting the Fed's moves, like well in advance?
I don't know anything about the Fed's moves, but it was our old boy, Uncle Warren. Warren Buffett said that any company that employs an economist has one employee too many. That's Warren Buffett. Don't be hating on me. That's Uncle Warren.
The output from economists can be very interesting fodder. It can really make you think a little bit, but
certainly from a contrarian perspective,
I don't think it can be. It's not useful. It's not actionable. I do.
What's
think
that?
If these economists say the sun's going to rise tomorrow, it won't.
All you need to know is when there's a Fed meeting, just watch the tape. The reaction tells you everything. Stocks for the last 2 Fed meetings, I think it was November 1st and December 13 or 14. And the first one was kind of like Powell hinted at pivoting. And then the second one in December, this month, he was like, yeah. And then you saw it.
Yeah, but the market loves to jump the gun, though.
It did. That's my point. All the interest rate sensitive groups were already ripping from late October, right? REITs, banks, these specialty finance companies, biotechs, long duration growth stocks. So I think the stock market continues to forecast the Fed's moves really well. I would say, JC, better than your bond market.
I don't give a shit what the Fed is doing, so I don't know.
But it's not even about they're navigating.
I don't know why everyone's so obsessed about the Fed. I just don't understand the obsession.
I'm just talking about the price action. Like, you don't even need to know why they're pricing in what they're pricing in these markets.
I just don't understand why the Fed matters to anybody. Like, who
Pretend I'm not saying Fed. Pretend I'm not saying Fed. The stock market continues to call the environment very well. Does it?
It always has.
All right. Saying.
So this time is no different. Shocking.
It's front running the Fed's moves. It's telling the Fed what the Fed is going to do before the Fed admits that it's doing.
Again, I don't know what this has to do with the Fed. What does the Fed have anything to do with this?
Again, I was up late last night on Twitter Spaces.
It's a dog.
Don't listen to those people. Those people are crazy, bro. Like, they need therapists, and you're not a therapist. You don't have to like listen to them. You're really the furthest thing from a therapist. You need a therapist.
I have a therapist
for other reasons.
Dr. Phil. I am so excited for daytime football today. Glad you're going.
Can we let's say to the markets, because it's whipsaw hunting season, and I'm finding some.
Okay.
I want to talk about our candidates this season. This is a little time of the year, no big deal. We like to call it whipsaw hunting season. This is where this low liquidity, low volume, big time portfolio managers are not at their desks. They are skiing with their families, or they're in Europe, or whatever it is that they're doing with their families. But being at the office is not on the list of places for them to be. Guys like Strazza that worked at big hedge funds will tell you that this is better parking season, right? You don't have to go to the overfill lot and walk in the cold to the office, because all the portfolio managers that get the great spots aren't there. So you're getting a better spot if you are in operations or accounting or some sort of the staff, right, Strazza? Better parking lot, better parking season?
Because the accountants still have to work this week.
Right. They have to work pretty hard, right? Well,
yeah. Very hard, actually, getting ready for the year-end close.
Right.
I looked forward to this week because I felt like I was like first class.
You may have felt that way, but reiterating that the B squad is on the desks, and they're not allowed to do much. So what ends up happening in my, experience, is that extended trends, in other words, trends that have come a long way entering this particular low liquidity period, tend to extend further than they might otherwise if the A squad was actually on the desks. So what you end up seeing is extended trends get further extended, and come the new year, you get the ripper in the opposite direction. Last year, it was these growth stocks, technology, high growth, continued to sell off into the end of the year, ripped into the new year. Other years, it's been treasury bonds, precious metals. Every year, you have these groups. And I want to go over a few potential candidates, just because they make the list of potential candidates for a new year whipsaw. Doesn't mean it will happen, but it's whipsaw hunting season. So we want to go where the whipsaws are hanging out. The first one, ready, ETH BTC. Very extended. Throw it up there. Slide 2. Very extended here. Like super extended. This thing's been going down for, 5 quarters or so. Briefly made a new low. Momentum diverging. What do you think, Strazza? You think this is a good candidate?
It looks like it's starting. I don't want to jinx it, but ETH did have a big day yesterday. Let's see if it could stick it. Some of these moves are really coming off. here.
Big move over the last couple of days in ETH BTC for this flipping crowd. I love the new lows on December the 20th that quickly reversed, consolidated, and have continued to follow through higher. Just to kind of quickly give a fast rundown here. In the funny money, ETH BTC is up 2%. This is while Bitcoin is down 1.5%, down to 42,700, and Ethereum hanging out right around 2,400, up about 60 basis points today, with Solana down 6% again, all the way back down to 100. So serious rotation happening in cryptocurrencies. Meanwhile, Dow futures are flat, S&P futures flat, NASDAQ futures up almost 30 basis points, close to 50 points on the NASDAQ, ripping this morning. Bond futures down 30 basis points on the 30-year. Gold futures down 30 basis points. Silver down 50 bips. Copper down 70 bips. Oil down 1.25%. And the dollar falling again as the euro, yen continue to march higher. Interest rates inching higher. Volatility essentially flat. Still not a teenager, down towards 12.5. That's your quick rundown. Any thoughts there before we go to candidate number 2 on the whipsaw hunting?
No, I like candidate 1. That's good.
Candidate 1, the flipping trade, ETH outperforming BTC coming into the new year. Potential. Very good risk reward here, most definitely. How about the next one?
Yeah, I think this is going to be, like we talked about yesterday, the corrective wave is coming. This will hook higher. These.
So consumer staples continue to underperform. Low volatility stocks continue to underperform. What do we normally see in bull markets? What do we normally see in healthy market environments where stocks are going higher? These lines usually go down in bull markets, right? They usually go up in bear markets.
That's right.
Or at least during corrective phases like Strazza was just alluding to. If and when the market corrects, my strong suspicion is that you're going to get rotation into these areas, and these lines are going to start to go up. Now, when you talk about extended trends, when you talk about low liquidity environments where trends extend and could potentially reverse coming into the new year, I think you got to put these in the category, Strazza.
I would agree. I would agree. They're very extended at this point. Been great information all year.
And what is the trigger for this actually being real?
The trigger for it being what's fake about it?
Well, the fact that it's just keeps making new lows. Not that it's fake. I'm talking about a real move higher. Like you got to get back above
2021 low recapture.
The November lows from 2021.
That's right.
So we still got a ways. We still got a ways away.
If you flip this chart upside down, it looks like the major averages, right?
Indeed.
Which this bottomed in late 2021 instead of like stocks peaking in late 2021, early 22.
That's right. That's right. These also peaked at the end of last year. Speaking of whipsaw hunting season, classic. Extended trends, extended higher into the end of the year, and then completely reversed coming into the new year as stocks ripped. Not a coincidence, right?
Not a coincidence at all.
So do we see the exact opposite this year? I don't know, but we got to put it on the list, right?
It's on the bingo card.
Right. It's on the bingo card. Whether it hits or not, I don't know, but we got to put it on there. How about these? Slide 4, Spencer. Extended trends. Can't argue with that. Listen, we've been bullish. We've been making money. Everybody's happy. Great. That doesn't change the fact that these trends are extended going into whipsaw hunting season. Do we look for reversals? And what level triggers that reversal, do you think? It's not easy, right?
I mean, it's the old highs, no?
Which old highs?
We're right there.
Which old highs?
2021.
The all-time highs.
Like, why wouldn't it be as simple as that for the NASDAQ?
Well, the S&P 500 is literally getting back to those all-time highs as we speak.
We used to draw that line around 455 in SPYs. Remember? We drew through the ultimate cycle peak.
Yeah.
You were doing that.
Yeah.
You can throw it there for your line in the sand.
How about you just ignore the S&P 500 altogether? Everything I'd say that.
How about this
And
460? I think 460 is good. Yeah, you could ignore it. There's better levels elsewhere. 200 and Qs, and then use the
400 in Qs, you mean?
200. I'm sorry, 200 in IWM, and then this 405 or 400 in Qs.
What do you think about, you nailed it on the 400. Pull up the new slide 2 here. What if you just ignore the S&P 500 because it's a little messier, and you stick to the behavior of the Qs, and there's your 400? How'd I draw that? If you're below 400, the risk is to the downside or corrective action at the very least. And then if the Qs are correcting, the S&Ps are probably going to have a hard time going higher, right?
I have a level.
That's not a lot of wiggle room, though, JC.
Nobody said it. It's just the market. I can't control it, Spencer. I mean, and again, I'm asking Strazza. I mean, just asking in general, if this is a good level to draw that line. I think it's a pretty good one.
It's really not up to us. I think this is. I think this is really it, though. Fonz, throw this up, and if you got the Russell 2000 from our call yesterday, throw that one up too. So JC, the small cap Russell 2000 tells you a lot more about what most stocks are doing than something like the NASDAQ 100. No? Agree? Russell 2000. 20 times the amount of stocks in it.
Yeah, Russell 2000 looks a lot like Value Line.
Yes, right. Which is why I use it for this. I think it's a good representation of most stocks. It's just as simple as if this primary trend reversal comes undone, indicating that it needs more time of basing, which would blow my mind at this point because we've done a lot of basing here. But if it falls back below 200, back in that old range,
yeah, that's right.
That's a big one for me, right? That tells you most stocks maybe haven't completed their trend reversals, or it's still sloppy or messy and a slow start to it, right? If we blast off from this 200 level and that trend reversal is complete, valid, I think that's it. That's all you need to know.
You're right. I'm with you on that. 200 on the IWM, 400 on the Qs. Those are some pretty solid levels. If this is going to be a whipsaw, those are the levels that'll break. Those will tell you the risk is to the downside if IWM is below 200, if the Qs are below 400. Great. I agree.
We talk about how it's like a low volume, low liquidity market this week, and then they're going to come in and reverse them next week. Do investors and traders need to be cautious in the first week of January? A lot of people are probably getting bulled up here this past month and YOLOing some stuff. You don't want to take too hefty of positions, even in things that are working, into the new year, I think.
Well, we're going to talk about the hedge that we put on Chewy yesterday in a little bit.
But how do you manage that risk? Do you just put on your YOLOs via options, right? Like not be in the common? What do you do? If there's a hard reversal in some of these stocks that have been melting higher next week, do you just go in with smaller size? You take some off the table this week? Like, how do you prepare for?
I think you follow your plan on whatever trade you have. Like, I don't think that just because it's the beginning of the year, you're going to change your plan. You know, what we're doing here, this exercise that we've been doing every year since I first discovered this, probably 10, 12 years ago. And you get it a lot at the end of August also.
Yeah.
Right. It's not just the end of December. It's also the end of August before Labor Day. Would you find similar advantageous parking locations at the end of August there, Mr. Strazza?
It doesn't stand out. No.
Really? So this one's definitely much more aggressive on that front than the end of August before Labor Day.
Yeah.
Huh.
Yeah.
All right. That's probably fair.
Yeah.
All right. Last one. Last one that we've identified, and if you guys have any trends that you think are extended, and this isn't like individual stocks as it is maybe groups of stocks or asset classes like precious metals or bonds, you know, extended trends that extend further this week, looking for a key reversal. If you have any potential candidates, shoot them over. But I got one more for you. Throw up slide 6.
Yes, now we're talking.
Talk to me, Spencer.
Okay, this is this was always my favorite, and I use that term loosely, but my favorite of the cannabis ETFs for the exposure that it gets you, right?
Oh God.
Oh God.
Because look, the cannabis space was sort of beleaguered by the fact that for a while, when it was not really legal in most places in the U.S., you really only had the Canadian pot stocks, right? You had Tilray, you had Canopy Growth, you had Kronos, et cetera, et cetera. Those are all Canadian companies. MSOS owns the U.S. companies, the U.S. multi-state. That's what MSO is, multi-state operator, right? So this owns the U.S. companies that are actually in America, which is obviously goes without saying a much larger market than Canada, and can operate in the US. These companies are plant and touching. They don't trade on exchanges because it's still illegal federally, but when that changes, they will uplist to the exchanges. We're talking your Green Thumbs, your Curaleafs, your Crescos, et cetera, et cetera. The companies that actually grow and sell the stuff. Touch the plant. How'd I do?
I don't know about all that, but this is an extended trend to the downside. Hated group. I feel like the people that own it hate it even more than the people that don't own it.
Maybe.
Extended, momentum diverging. Is it going to be the year of the pot? Spencer Israel, our marijuana correspondent here. Is it time?
Look, I don't own any of this anymore. I owned it for a while there. I'm certainly not opposed to taking a new position, but you got to show me first.
Can we go to the next one? Go to the next one.
You got to really show me. I need more than a month of good price action.
How about Tilray above 2.5? Flip the book.
I frankly don't have any interest in the Canadian companies. I really don't.
Is this from Canadian? I don't give a shit whether they're Canadian or from Afghanistan. What is the difference? If we could sell it higher than where we buy it, that's all that I'm interested in.
Tilray, to its credit, is a bit memey, so it is liable to rip. I mean, you can see it on the chart right there.
It's a bit It's a bit memey. Just a bit memey.
It is.
Can you imagine Edwards and McGee hearing that? Charles Dow. Bit memey. Can you imagine? Is that in the CFA exam, you think? Mimi? Define Spencer, can you define the term Mimi?
Yeah, okay. Mimi is to me kind of the same thing as squeezy, right?
Squeezy.
To me, they're synonyms. So a stock that's liable to rip due to any variety of factors, be it low float, high short interest, days to cover, or just popular on social media. These are any of these factors are liable to make a stock rip higher for no real reason. Not that you need a reason, right? But Tilray, for whatever reason, this stock had the greatest one-day move I've ever seen in my life. It went from 150 to 300 to 150 in the same day, and that's still the all-time high. So
easy peasy, Mimi squeezy.
That's it.
Gotta love the chat.
I'm not against this trade
Strazza,
at all.
Yeah, Strazza, would it make sense? I always say that pot stocks should be consumer staples because regardless of whether the economy is good or bad, people are still going to be smoking pot, right? So it should be a consumer staple, not a healthcare stock. That's the dumbest shit ever. I like your thoughts of the farming stocks, agriculture. Yeah, I like that, but I think it's consumer staple and to consumer product. Above 2.5, I think it's squeezed. Would it make sense if you get rotation into staples and the pot stocks at the same time, Strazza? Proving my point once and for all.
That would shock me. That would shock me because here's the thing. I get your point about them being staples. This is a very different business than a lot of these staples. These staples are low, slow growth, quality, fortress balance sheets, right? They tend to be good inflation hedges. These pot stocks, I'm surprised that they're not rallying with interest rates coming off because it's one of those businesses that needs to raise capital pretty often.
These things are that shitty.
I don't know what gets these going, but I definitely don't think that once you see a defensive bid in the market that they're going to start working.
17% of the float is short Tilray.
Listen, if you're a fan of the pot stocks, if you have some sort of long-term bullish thesis on the pot stocks, I encourage you to look at these charts. The charts are the best representation
forget the long term. Forget
the long-term fundamentals. The fundamentals of this space are very bad.
Yeah, no shit. Everybody knows. My question is, forget the long-term thesis. Forget it. It's whipsaw hunting season, Strazza. This is a candidate, is it not?
But it's not whipsaw hunting season until next week.
No, it's whipsaw hunting season this week. We got to start observing these trends. The reversals, to your point, come next week and the week after. Yes. But we got to throw up some potential candidates. Isn't that what we're doing here?
I think this is a squeeze candidate, a lot of these pot stocks. I would be surprised. I don't know why they're not working in this tape, frankly.
Because they suck.
I would expect them to work. A lot of stocks.
Not working yet.
Not working yet. Tell them, Spencer.
There's too many people like Spencer running around watching these things, talking about them all day like there's some sort of special group of stocks. Everybody.
For the record, Tilray bottomed in June of this year.
I didn't bring this up.
No, but there's a lot like you out there.
You people with your, smoking your marijuana cigarettes.
People love a good story, man. It's amazing. It's really good.
But this is a shitty story that people love.
They still try to make it sound good.
All right. When you talk about buying high and selling higher, we're talking about something else here with Tilray. But nevertheless, yeah. I would argue that this is a whipsaw hunting season candidate. Doesn't mean it's going to rip. It doesn't mean S&Ps are going to fall or this Russell 2000 is going to fall. It doesn't mean that ETH is going to outperform BTC. But these are valid candidates for potential whipsaws coming into the new year.
Can I give you one?
Stick with that.
Can I give you one while we're in the cannabis space? Fonz, you know where I'm going with this. All right. JC loves the, what are they called? Picks and axes, picks and shovels, right?
Picks and axes. Shovels, picks, axes. Oh yeah.
There's another good phrase for these companies. No?
What is it?
I don't know. I thought you would know it. There's another one that I'm looking for.
Like the accessories, the
joints and lighters.
They don't touch the jugs.
The joints and lighters.
Okay.
Yeah, they don't touch the flour.
They don't touch the jugs. Okay. Turning Point Brands. They make zigzags. Heard of them?
No.
Really? This is the company that makes zigzags?
I don't know what that is.
Yeah, zigzags are rolling papers. The orange packet.
Spencer only smokes blunts.
It's not true.
I mean, back in the day, there was no raw rolling papers. Back in the day, it was pretty much
zigzags.
Zigzags.
Spencer's too young to remember that.
Mm-hmm.
So look at this beautiful trend reversal. This one looks like the other ones. They don't touch the pot. They don't have all those problems like Tilray and Canopy growth. And the other ones, chart looks a lot better for good reason. You got 200-day curling, flattening, sloping higher. Momentum hitting overbought on the breakout, confirming the move. If you just have to buy a cannabis stock, get your rocks off. I think this is a pretty good candidate. It's a small stock though. Go, do your homework.
Zigzags. How about that? Do they do anything else, or they literally just make zigzag favors?
That's what stood out to me, but they have other brands for sure.
Oh, got it. I just love the picks and axes just in general. That's my fundamental analysis, just in general, observing, during the gold rush, who made money? The people looking for gold or the people that sold them all the stuff to find gold, right? They made a killing with these guys. Yeah. Here you want to look for gold, you got to buy all this shit first, You
see it in all these industries, and the analysts, for whatever reason, don't do a good job at calling these companies out.
And I've seen the marijuana growth deals. Like I've looked at a few deals, especially when I lived in California, because I was like the Wall Street guy that just moved into town. So I would see all these deals.
You were the money man.
Word would get around. I mean, it's a small town of locals in Sonoma, so yes, word got around quickly, and so I would see the deals, and the economics seemed fantastic, other than the fact that you can't deposit the cash. So that would, other than that little tidbit, but. Let me tell you something. When you look at the expenses for these grow houses, the lights, oh my God, it was crazy, the lights. So, again, to reiterate, it's not the business of growing the weed. It's the business of providing those businesses with their supplies and whatnot. Lights are just a great example. In these grow houses, the lights are like 70% of the expenses. It's crazy. It's insane.
A lot of equipment, a lot of high-tech equipment.
Who knew these? Because they got to be like these special lights, whatever,
So that's where Scott's Miracle Grow made a big bet.
Great business. Great business.
That space. Maybe that stock works.
High margin businesses. Oh, man. Look at JC getting all fundamental on you. You like it, Strazza? You like it?
And what happened to the growers is really simple, right? Like you're talking about, they didn't have a really low-cost model, right? There was a decent cost structure in place there. And then their top line has just gotten squeezed and squeezed and squeezed and squeezed, probably down 70, 80, maybe 90%. And if you don't know what I'm talking about, just go to a dispensary or ask your friend what they pay for marijuana today versus what they paid for marijuana 5 years ago. It continues to get cheaper and cheaper and cheaper and cheaper.
Yeah. Inflation my ass.
Right.
Even cheaper to buy in the black market. No taxes.
That's also part of the problem of that business is that you're getting better weed with the local guy than you are at the dispensaries.
I don't think so. I doubt it at this point.
I'm not an educated enough consumer to make that claim. But it's certainly cheaper. All right, we're gonna have Blake Millard join us in a second. Before that, let's just do a quick rundown. It's funny. I was looking at that ETH candle a couple hours ago. Now it looks a little better than it did.
What ETH candle?
The one from
the ETH candle.
Yeah,
there's one ETH candle.
ETH USD.
The one.
Spencer doesn't like the upper shadow.
Yeah.
Are you looking at a daily candle at 9 o'clock in the morning?
Yes, like 6 o'clock in the morning.
Yeah.
Well, no, listen, they came off a lot.
These candles don't finish for another 11 hours. So if you're looking at incomplete candles, it's just mental. I mean, you're wasting your time.
I don't disagree. I was just making a comment.
Someone
let them dance. Let them dance, man.
Yeah. So someone was asking me yesterday. A client of ours was asking me yesterday, "Are you selling any of your Solana yet?" And I said, "No, I really want those old highs at least, right? And then I'll start scaling out." And I said to him, "Go back and look at the chart in 2021." I said, "Just be mindful of this going in, if that's your plan, to hold all the way to those old highs." From April to July of 2021, Solana drew down more than 50%, and then continued its insane uptrend and just kept rallying and doubling and tripling from there. But it drew down 50, 60%. So you have to go in, right, with that mindset that there's going to be a nasty drawdown probably somewhere along the way in these new bull markets, right, JC? Like these assets are super high beta, super volatile. When they sell off, it's a real deal sell-off. We talked about these crypto miners and the sell-offs that they endured.
Mara's down 7% pre-market. It was up 15% yesterday. So, it goes both ways.
But hold on, isn't this what you're supposed to do? Aren't you supposed to buy weakness during uptrends?
I think you're supposed to make a plan and then stick to it is what you should do.
Yeah, okay.
He wasn't asking me about buying, he was asking me about selling.
Oh. I thought that Mara was going to get to 30. Mission accomplished. So let's see what happens now. I think it probably consolidates for a while and then breaks out again. We'll see. But if it doesn't, then it doesn't. Like, not my problem anymore. We'll see what happens. Mission accomplished.
You want to talk about? Oh, we got to bring Blake on. I want to talk about these Coinbase insider sales later. Remind me.
Okay, cool.
Okay, so hold on. Blake is here, but he's not here. So let's keep going, and then when Blake actually gets here,
why don't you tell us? Why don't you tell us a little bit about what these insider sales? You want a hot corner bumper it?
Yeah. Let's hot corner real fast.
Bump me up.
Bump it up.
Yeah. Bump me up.
Hot corner. So hot right now.
So yesterday we were doing the hot corner call, and I got a comment in the chat saying Kathy Wood is selling Coinbase. I said, well, I hope so. I'm selling some Coinbase too. It gets too big. JC, we talked about this. Contributed 25% of the gains in the ARK flagship fund this year. Got far bigger than any other weighting in their index. Don't throw this up right now. This is not about this. It was up something like 400% this year. By far the best performer of all the ARK holdings. It becomes too big of a weighting. It's her job to sell it. She has to. And it doesn't that doesn't tell you anything about what she thinks the future prospects for the company, right? She has to sell it because it's frankly just too big. She's not trying to run some sort of momentum fund where one stock gets 4 times the size of the next biggest stock. It's not what ARK is. So of course she's a seller. She's a forced seller, basically. Fred Ursam and other insiders have also been selling shares of Coinbase, but mostly Ursam, the co-founder. Ursam is the reason why Coinbase came on our Hot Corner Insider Strategy list in the first place. He was buying not just millions, hundreds of millions of dollars worth of stock starting in May 2022 and straight through May 2023. Now he's turning around and selling some of that because he's up 4x on his position. Good for him. That also shouldn't surprise anybody. And also, we don't know what's going on in his personal life. I don't know. Is he getting divorced? Is his daughter having a wedding? I don't know why he's selling, but he's made a great trade. His cost base is around 40, 50. His purchases over the past 2 years, and now he's selling some. So we're not going to overthink this. This is why we pay a lot of attention to the buys, because there's only one reason to buy, and we pay very little to no attention to the sells, right? Because there are a myriad of reasons to sell. So if you're hearing all this noise about Coinbase insider sales, these guys are up 400%. Kathy Wood's up 400%. The co-founder's up 400%. So they're taking some off the table. I wouldn't overthink it.
CryptoPunks making new 52-week highs this morning.
Was the easier money probably made in this trend by now? I don't like that phrase, but probably.
Dude, Coinbase has been overbought for like 2 months.
It's crazy. It's absolutely crazy.
Which is I just want to point out, folks, this is a great example of when we talk about overbought conditions. Overbought conditions are characteristics of uptrends, healthy market environments. Stocks and downtrends don't get overbought. People are like, oh, JC, I can't buy it because it's overbought. How can an overwhelming amount of buying pressure possibly be a bad thing?
This is something we've never done internally. We're always running stats and doing our quantity stuff, behind the scenes here.
Quantity stuff.
We've been running the streaks, the number of days overbought for these individual issues. We've never seen anything like this. Like JC,
that's not true. We've never seen anything like this. What are you talking
about?
In
my career, I've never seen stocks overbought like every day for 60 straight days. I've never
harder. Go back. There's
never
plenty.
seen this.
All right.
I'm sure I would have to go to the .com bubble to get that. I really.
2016, you had it for a while.
We went back to the 2021 run up, and sure, there were some massive overbought readings, but then they would come down, right, and dip out of overbought. We just hit overbought in some of these issues, pinged it, stayed there, and just went sideways. Really, really incredible. But it does speak to the underlying bid for these assets and the aggressiveness of buyers. So, like you just said, definitely not bearish. Do things get overheated in the near term? Maybe. I would expect some profit taking in a lot of these issues pretty soon. Does that all happen in January? Because people don't want to pay their taxes?
Maybe it happens today. Right? Who knows? We'll cross that bridge when we get to it. But I think it all comes back to have a plan.
I want to know.
And then stick to your plan regardless of when, what time of the year it is and everything like that. And, if you want to put on certain hedges, like, yesterday we bought the Chewy, we put on the risk reversal where we sold the downside puts, we bought the out of the money calls. And then because we had a net credit, we used most of that net credit to buy the January puts to hedge in the short term, to your point.
Yeah.
And that's part of the whole plan.
Yeah, okay.
You know what I'm saying? Like, that is exactly what you just described is the plan for that trade. Somebody who put on a trade 3 weeks ago to now all of a sudden change their original plan, because surprise, next month is January. You knew next month was January when you entered the trade 3 weeks ago. You know what I mean? So like that should have been part of their plan. No?
Yeah, no, I'm with you. No disagreements here. Hey, I thought it might be fun to, but maybe this is kind of lame. Have some charts that just show volume kind of falling off a cliff like the past 5 trading days.
We also have Blake, just so you know. So
pull the volume indicator onto one of your charts and just flip through the S&P 500 components, right? Because we're not making this stuff up about how low volume, low liquidity this week and last week are. Like you see it right on the charts. Just flip right through the components.
I don't think anybody's debating that. I think it's kind of, it's common sense. What's not common sense is how to take advantage of it. And I think our way is is one very good way. I'm sure there's plenty of other strategies that you can incorporate. I really like ours a lot. Looking for these potential whipsaws. We see it every year.
So we're gonna be fading trends in January?
No.
Okay.
You're not listening.
I know.
We're not fading trends. We are specifically looking for extended trends that are getting further extended this particular week that may or may not reverse come the new year, but is worth monitoring because you get monster moves.
So maybe we'll get long cannabis stocks in January?
I hope so. I mean, I'm rooting for them. I don't have a horse in the race. I don't give a shit. But if Tilray's above 2.5, flip the book. Let's fucking go.
Let's bring on Blake.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Blake.
Good morning.
What's
Look
up,
at
my
you.
man?
Florida Keys man.
There's an absolute monsoon occurring behind me. Is that hitting you right now?
Oh yeah. Yeah, it's been rough here.
Hold on, Blake.
I
Hold
tracked all the
on.
kids
First of all,
down, post Christmas, and about the same weather here as I could have just got back in Maryland for free.
You sound like a robot.
that's all right. Blake, thanks for being here, first of all. Second of all, I saw a tweet, no booze, no THC. Speaking of pot stocks, no booze, no THC, clean living. Are you still on that train? How long did it last? How do you feel? Talk to me quickly before we get into the market.
That was October. That trend has ended. No, it's great. I don't think I've ever felt better in my life. Just like crisp, more productive.
And you were exercising every day too, right?
Yeah, I did the Peloton pretty much for almost 30 straight days, and I was lifting. It was a nice reset. Hadn't happened in a long time, so it felt great. I don't know. Have you guys ever done that? It's rather challenging, especially with kids and all the activities that are constantly happening. It's almost impossible to avoid it. So
yeah.
JC has kids.
Strazza doesn't understand, Blake. So next time you see him, just smack him upside his head. Blake definitely understands. Blake, you got 4 of them?
Yeah, we had 4 under 3 at one point, but now they're a little bit older.
Mad respect, bro. Mad respect. Strazza doesn't understand. I get it. So I have a lot of respect for you, my friend.
I listen. I get it.
Yeah, you don't get
We'll
it.
be there one day. We talked about that in the heat. It's coming.
Yeah.
How long are you in Largo for?
We're here until next Tuesday or Wednesday. Forgot the.
Are the kids with you?
Oh yeah, they're all hibernating in a room right now. So my wife is an angel.
Nice golf course over there.
Oh yeah, Ocean Reef is. There's 3 courses. One's only for equity members, but the other 2 you can utilize.
What mile marker are you in?
Oh, I have no idea.
Where is it?
Dude, it's way up there. It's as soon as you get in the lot.
We're way at the top. We're just our Uber was 55 minutes outside of Miami.
Yeah. Right there.
All right. So Blake, why don't you explain quickly before we get into the markets what perspective you're coming from, right? You're not the chief YOLO officer at your firm. Right? So you have a different approach to the market. You're not slinging pot stocks coming into January 1. I mean, unless you're doing it for the A account or something. Why don't you tell me through what lens you approach the marketplace?
That's a great question. And that's so important because I really think for most investors, you really need to approach, or you should be approaching the market really through 2 lenses. It's what's your risk, or risk tolerance, risk capacity, that kind of question. How much risk you're willing to assume. And then it's, what's your time horizon? And to your point, I'm a portfolio manager for an RIA where the majority of our accounts are not really focused on what's going on today, this week, this month. We're much more intermediate to long term. But of course, always paying attention to those short-term signals. So For example, thank you, Santa Powell, for delivering a Christmas miracle. That December FOMC meeting was an absolute game changer. So like those short-term dynamics are always filtering in through our process. Yeah. But something like that all of a sudden changes the intermediate and the long term. Softer Fed, more projected rate cuts, easing inflationary pressures, which at really this point it's all in housing and autos. That's sort of where everything is backlogged. But no, all of these point towards a Fed that's downshifting the most aggressive monetary policy in decades, maybe ever. We're transitioning from a policy that's grounded in an inflation war to one now that we're just managing the business cycle, or at least that's what I believe the Fed should be doing at this point. All these charts you guys flip through every day, all the trends that have been in place since the market bottomed in June of last year, they're just not reversing. Not when Jerome Powell came out a couple weeks ago and basically said the Fed at that point is done. So like these reversals, I think that have been in place for a long time, that's done. It's getting harder and harder to find a geography, an index, a sector that hasn't really completed this major primary trend reversal pattern, whether it was quick or elongated. But like sellers have been taken out at key levels across so many different asset classes. Take the little guys, for example. The small cap Russell 2000 index finally cleared the top end of its range that it's been in since early 2022. 1,600 to 2,000, back and forth, volleying, just ping-ponging back and forth, going nowhere. Where did small caps recently resolve? Higher. And that wouldn't be happening in an environment or an economy that was falling apart. In fact, it's quite the opposite. I've been listening to you guys. Growth is leading as it should. Industrials are participating. Financials are catching a bid, despite this recession that we're already in or hard landing into. Home stocks, check. Modern day transports, those semis. I don't know what else people need to see for this sort of confirmation. The progress off the October lows from like 2 months ago, from a breadth perspective, you just have to respect it, I guess. Sector rotation, I hear you talking about that a lot, JC. I think technicians in this market are having just like an absolute field day. Every day I see a tweet or a stat from like Ryan Dietrich or Bespoke, breadth thrust this, momentum gauge that. Strazza, I texted you the morning that Zweig breadth thrust hit kind of, emission noise. Those aren't flashing at the end of a run. They're more often happening at the beginning. And then, when I think about like PE ex FANG is now at 15.3 times forward earnings. I think, and of course, I know you guys aren't go ahead.
What PE multiple is 15 times 15.4?
Ex FANG, just take out like the top 5, 6, 7, whatever name. And I understand that's cherry picking, but that goes to show you what the rest of, the market is made up of a lot of stocks, a lot of areas, a lot of different growers, and you can't just think about just these 7 stocks as representation of the broader market. So if you sort of take those out, you're looking at a market that's, fairly value going into a year that it almost sort of reminds me of when we were heading into 2020, this year basically. No one loves this market.
I love your point about valuations. Let's bore JC out of this conversation. We talked about this yesterday too.
Yeah, I'm out of here. You guys lost me. Blake, I love you, bro. I'm going to the football game. Miami Hurricanes are playing in Yankee Stadium, so I'm out. I'll see you guys. Before the game, if you're at Billy's, come say hi. I'll buy you a drink. Adios.
Is he really leaving?
What's funny is these fun stats called fundamentals, they matter. They matter to the monster institutional asset managers, who are building their investment strategies rooted in these numbers. Whether you like that or not, it's just the truth.
I think it's an interesting thing to think about, right? Because we do have the Mag 7. I was talking about Apple trading at whatever it is, close to 30 times earnings. But they're really the only ones that are crazy expensive. There were some hefty drawdowns in 21 and 22, and a lot of these stocks were, discounted significantly. By that, I mean they're trading at much lower multiples than we saw them at just a few years ago. So I value people, the fundamental people, there's a lot there if you're a stock picker, right? Maybe not the indexes because they're going to be so heavily weighted to the largest and most expensive ones. Well, like you said, beneath the surface, X-Fang 15 times. That's great. Let's go.
Yeah. No, I mean, I think a lot of people are underappreciating where this market has come from just over the last 2 months, but even in the last year and a half. When I think you add interest rates coming into next year, equity flows this year have been negative. So, we haven't seen a lot of liquidity flowing into equities. I think equities can really have a pretty good year next year and surprise a lot of people the same way it did this year.
Let's talk about the setup too. So the economy, you're paying more attention to this stuff than I am. Economy looks fine, pretty solid, right? If not strong here in the United States. Is that fair?
That's fair.
And then we have a Fed that's telling us they're going to cut 4 times next year, and a market that's telling us they're actually going to cut 6 times. So 4 to 6 rate cuts into a solid economy. What a setup. Is the risk not at this point overheating?
Especially with the run that we've just had over the last couple of months. You could have, so if you want to pull up some of those that I was going to bring along, it kind of speaks to some of these, numbers. And
walk us through the charts. What do you want to?
Of course. So just as context, this is a condensed version of a deck that we had just walked through with our clients in Sandbox. A couple weeks ago, we had Anastasia Amoroso join us for her perspective on markets. We just had this easy dialogue, but it's also a really nice opportunity to revisit with people. I don't know what it is about a new year or heading into one, but you just sort of, take a larger step back the same way you guys do every month with the monthly charts. It's just like a nice way to level set expectations, reset for people going forward. So what you're looking at right now is probably my favorite chart for any investor to internalize. As investors in stocks, volatility is the price we pay to participate in the market. The ride isn't always the easiest. And here what you're looking at is basically how many times per year you're going to experience varying levels of sell-offs. 7 different times a year, we're going to have a 3% pullback, 5% mild correction happens 3 times a year. The one we got back in the banking crisis, the 10% correction, that happens about every year. And then, of course, 15, 20, 30%, those happen with much less severity. And then, Spencer, next chart. The one we saw this year was the 10%, as I'd mentioned back in the banking crisis. This is my favorite chart from the Guide to the Markets. Since 1980, go back to the previous chart. So what this is basically telling you is since 1980, we have averaged a 14.5% correction, intra-year decline on average, all those red dots basically. And yet we have finished higher 75% of the time. So these pullbacks, if we might have one in the first quarter because things are feeling a little bit overheated, in the grand scheme of things, these happen, all the time. Spencer, if you want to go to the next slide.
See, this is my favorite chart.
So
variations of
whatever the headline will come up, whatever the narrative will be, just count on there being a narrative and there being reasons to, sell because of this being priced in or this hasn't been priced in. This year was no exception. We had, fears of a commercial real estate meltdown, air coming out of the housing market, AI and all the robots coming for our jobs, geopolitical tensions. We have 2 geopolitical wars going concurrently right now. The debt ceiling, debt, on and on and on. This stuff happens every year. Markets are never calm. You could make this list for a reason to sell each year. But just remember, the market is a discounting mechanism, people. So you don't have to worry about this. The market does it for you. Spencer, next chart.
I mean, we really climbed a nice wall of worry in 23, did we not?
Every year.
Yep.
Is that not true?
Yep. With you.
when we try to set expectations for clients going, on a go-forward basis, people always think about, long-term returns. The S&P is average about an 8% return. But this chart from Ryan Dietrich is amazing. Going all the way back to 1950, there's actually only 4 years that hit that bogey of, 7, 8, 9, 10% of return. What's more normal is the market has a big year or it has a small year. It rarely has an average year. So when you think about what you're looking from your portfolio next year, getting that average return, just markets don't behave that way. Spencer, next chart.
I just want to hammer that home 1 second. This whole thing about no individual component of the average is ever the average itself. Reminds me of the LeBron James stat. I don't know if you guys know this, where LeBron James, I don't know if it's still true, but as of last year, his career averages 27 points a game, 7 rebounds, 7 assists. And up until, I think, a year or two ago, he had never had a game with exactly 27 rebounds, 7 points, and 7 assists. Just never happened. That's why it's an average. Right.
Yeah.
Great points. This chart is probably, this was my investment philosophy distilled down into one simple chart. In the long run, prices go up, stocks go up. I just love this. It just keeping the long-term trend in mind when you're investing in stocks and you hear all these doomsayers and the bears get all riled up. Just know that this is essentially what they're fighting. Next chart.
That's great. Ooh, it's a good one.
So bull markets, as you can probably see, its size, you'd have to really pay attention to the y-axis, but bull markets are greater in magnitude, longer in length than their bear market counterparts. I think it's like since 1920 something, whatever it is, the average bull market lasts like essentially 9 years and has gained something like 450%, whereas the average bear market lasts like a year and a half and its average loss is like 40%. So those are just apples and oranges. Again,
and if this is a new bull market, what year is this?
What'd you say?
If this is a new bull market, what year are we in?
Well, it depends if you think COVID was just a disruption of the primary trend that began in 2009, or did we completely reset things?
I think this is pretty fresh. Wasn't it a bear market in 2022?
Yeah, and you got the back-to-back, so that's fair. You're likely resetting the cycle there.
Like yesterday, I was making your point about this corrective action that is so normal. I was telling everyone, get ready for it, right? And it's not a dip that you're going to want to sell. Like July into October, I think got a little bit spooky. At least for me, I felt like it was the time to be cautious there. But with the way breadth has expanded over the past few months, you're going to get some sort of probably 10% correction at some point next year. And it should, based on history, be a phenomenal buying opportunity. But that's the way we should be thinking, right? Like that's coming. It's around the corner. Probably happens in Q1, I would think.
And I would just revisit sort of how I started my comments is interest rates. To your point, it was getting a little scary there sort of into the early part of the fall where rates just went up unabated without any resistance. And then, of course, we got the Bill Ackman tweet, I sold my bond or covered my bond position. I mean, talk about someone who timed that. But when you're in an environment where rates are under pressure, it's going to be very hard for stocks to make any sort of gains going forward. And not that we even need them to come down. It's just some consolidation, some quiet moves in the market. Never heard so many people talk about the MOVE index, which is essentially the VIX for bonds.
Yeah.
But here, I think I got like one or two more charts. Let's hammer through so we can just close this out. You can skip this. This is pretty obvious. Love this. Basically, anything beyond 5 years, you're going to get paid in I mean, of course, this is for the S&P 500, but just
this is great. What a great start.
over shorter time horizons, there's a lot more variability. We know this, but as you extend that time horizon, the chances of you coming out positive, if you're invested in the S&P 500, I mean, it's approaching 100%. You finally get there after like any 15-year period of rolling returns. So,
if I could show one chart to young people, young investors, just got out of college, right, on their first job, it would be this one.
It's a great one.
One chart you want to show a young investor. So important.
Or hit the last one, sort of is the same concept. This is essentially showing you what happens. I think we have one more, maybe not. It's essentially, here we go.
Oh, yeah.
Just don't get too cute.
Right. You don't want to miss those best days. Yep. Great study.
If you miss the best days, it is almost impossible to recover from. In fact, if you just missed 10 days in, this year, you went from positive to negative. So, again, time horizon is just defining your time horizon. And it's okay to have short time horizons. I get that. I'm not really investing along that parameter.
Sure.
There's strategies that work in that sort of environment. Absolutely. And then there's just different strategies and tools to use for intermediate and long term.
Listen, we know people.
These are my best charts, essentially distilling down my investment philosophy. And it's always so important for me at the end of every year for myself and for our clients to just level set what to expect going forward. Last year is now in the rearview mirror. Let's just come into the new year with a fresh mindset, grounded in a lot of history that, will help guide us emotionally through the ups and downs of the market to come.
When you're a short-term trader, right, you have to be very tactical. It could be very difficult. When you're a long-term investor, right, you get to zoom out. You should be doing a lot less, right? Basically, what you're coming on here saying, Blake, is it's a new bull market. We got the breath thrust, right? They're there. The hardest part becomes just kind of sitting back and waiting and being patient and not messing with it, right? Not overdoing it or making, tactical bets when you have a long-term outlook type of a thing. It's just you just have to be patient.
Yeah. Someone who I watch and follow closely, Tony Dwyer, he has this phrase, don't just do something, sit there. Sometimes it's frustrating to just let the market come to you and be patient because, of course, we're all emotional and human beings, so it's impossible not to get caught up in a lot of this, but sometimes the best move is no move.
Talk to me about what you guys did. Yeah, go ahead, Spencer. I'm sorry.
The rub is that, of course, there are market movement cycles, and there are periods of outperformance across the board, right? Where certain pockets are outperforming other pockets, and that can be a tough pill to swallow for some people, right? When you look and see, oh yeah, sure, I've done 10% this year. I could have done 30% this year if I just owned international stocks. You know what I mean?
Yeah. Strategies aren't meant to work in every single environment. There will be times where growth is in favor or values in vogue or it's factor investing. That's a great point. Not everything is going to work all the time.
Blake, tell us what worked for you in 2023.
Adopting a pretty aggressive mindset early. We were pretty constructive on markets all the way back in February, which actually was really difficult timing because quite literally the next month was all of this regional banking crisis and everyone on Twitter becoming an economist. That was definitely a difficult period where we had put on some risk trades, and to see that happen like right after the fact was definitely a little bit troubling. But we held through that, and we're pretty much risk on the majority of the year. That worked pretty well in our favor. Energy was a little bit of a laggard on a position that we've had, but growth. We had a decent amount of growth exposure, and that has paid off really, really well. We haven't really had to worry about interest rates. We do a lot of our exposure through structured products. So we essentially isolate duration risk there. So that's been nice, not having to worry about any of that. Yeah.
What kind of structured products? Just curious. How are you doing that?
So we're doing what are called income notes, where you're tying them to a basket of indices, and then you're given a certain level of protection on coupons and on the principal itself. So you're essentially making a calculated bet that on the day you enter a trade, say you're tying it to the S&P, every quarter for the life of the note, which is usually about 5 or 6 years, every quarter it observes, and you're basically making a bet that the index is not going to fall by more than 30% point to point on that date. It can go up or down between those dates, but over the course of the year, you have 4 observations in essentially that the S&P cannot fall by more than 30%. If you do, you miss your coupon payment, and as long as you're above it, you're collecting your quarterly coupon, and then your principal is actually protected more, like 40 or 50% down.
Wow. And what are the coupons like? What are the payments like?
They're usually, we can source terms between like 10 and 13%.
Wow. You're kidding me.
Pretty good.
Shit.
So
it's nice to be able to use some structured products.
I was using this at UBS all the way back in 2015. We were one of the first. We were a big private wealth team, so we were one of the first to get introduced to these. And in that environment where it was zero interest rate for so many years, the clients that we were managing that had already sort of made their money, it was more like preservation as well as income. Structured notes were an absolute game changer and a huge home run. Clients were so happy with them.
That's awesome.
Yeah.
So 2024 now. Tell me about that. What's the game plan going into this new year?
We are pretty much constructive on markets. I think we are probably due for a bit of a breather, just given the run up. So I wouldn't be surprised if some sort of corrective action happens in the first quarter. But no, we'll be watching interest rates. I'm always watching credit spreads. That's sort of a big tell for me. I'm watching the advanced decline line. Are more stocks going up or are they going down? And the labor market. I'm going to be watching that very, very closely. Over the last 6 months, the new payrolls report, the non-farm payroll reports have really come in quite a bit. I know the unemployment rate is still basically at multi-decade lows, which is why I've been partially so constructive on markets. Can't have a recession. You can't have this economy which moves slowly. You can't have it just change on a dime when everyone's employed and people are now, with inflation coming off the boil, we're seeing really real wage gains. We saw the New York Fed report, their triennial report that they release every 3 years. Household net worth is at an all-time high. So yeah, I mean, I'll be watching the labor market very closely, just, tracking where initial claims are coming, how that feeds into the continuing claims, and then those monthly reports that was something the Fed was so careful to watch, which was not only are we still adding jobs, but it's more the 3 month and like the year over year gain in wage gains. Those have come in a little bit. Jobs we're not producing as much on a net basis. So we're seeing some slowness in there. I just don't want to see that really turn over materially because that would definitely signal some bigger red flags for the economy.
Look at the consumer spending data, right? We get some sweet data around the consumer around the holidays. This was a really good holiday season, right? Like consumers are out there doing just fine, it seems. So we'll have to wait and see. I guess this cycle is probably a little bit different. What? I didn't hear you. I didn't hear you, Blake.
Yeah, no, the consumer won't slow down. People often point to the like excess savings chart where it's like, oh, all these people are still just sort of running on fumes from COVID handouts and government assistance and all that kind of stuff. But I would say that, again, net worth is at an all-time high. Stocks are at all-time highs. their house is worth more than it was 5, 10, whatever odd years ago. People are in a pretty good place.
Houses are worth a lot more than they were 2 or 3 years ago, especially down here in Florida.
Oh, yeah.
Guys, Blake does a great daily note. I get it. Steve gets it. Highly recommend. The link is on the screen. It's also in the description on YouTube. Blake, thanks a lot for coming on, man. Happy New Year, and enjoy the rest of your vacation. Thanks for joining us during a vacation, no less.
You're the man. Love you, buddy.
Yeah,
enjoy
no,
Key Largo.
My wife is an angel. She's kept the kids perfectly quiet. So thank you, guys. I really appreciate the invite. Enjoy the rest of what's left of the year. Happy New Year, guys.
Enjoy
Same
Largo. Beautiful. Look at this view. Look at this view he has. Beautiful.
You can't even see.
I just wish
rain,
it was sunny. It's pouring.
Oh.
I don't know if you can see. It is absolutely pouring rain.
Yeah.
It's just slowing down here. So maybe there's good news headed your way.
Awesome. Thanks, guys.
Like,
later, Blake.
To the point about a market correction, the all-time high was on January 3rd, 2022. It would be awfully convenient if that was where we topped out again.
What was?
January all-time high in the S&P, January 3rd.
2022.
2022.
So you're saying, wouldn't it be funny if
It would be funny. It would be
January
hilarious.
3rd, 2024, we peak and roll over again?
It'd be hilarious.
What kind of perma bear are you?
I don't know. I kind of want to see all-time highs before the end of the year, but we're running out of time. Speaking of time, it is time to bring on our second guest of the day, Mr. Sean McLaughlin.
All right.
All right.
I'm going to get.
Well, good morning, Spencer.
JC has abandoned us for the pinstripe ball. Steve is here. He's getting a glass of water or something. So for the meantime, it's just us.
Well, I'm glad JC's going to the Pinstripe Bowl because he might be the only person who cares about it and will be watching it. So at least somebody will be watching it.
You know what? And at least he won't freeze to death. Although it is supposed to rain all day, but at least it's warmish for this. Definitely warm for this time of year. Sean, has anything? I feel like every time we talk to you, at least for the past I don't know, a month, maybe more, it's just been more of the same. Is that it? Is it just more of the same for you? Nothing's really changing.
No, I don't think that's true this time.
Okay.
You know, I was going to say that yesterday in our analyst meeting, JC set me up. He set me up.
He did.
And he knocked me over. Let me explain. He gave me the floor in the analyst meeting yesterday to say, Sean, how are you feeling about the market right now? Like, what's your stance? Are you conservative? Are you aggressive? Are you looking for bearish trades? That kind of thing. And this was the setup. So I said to him, and this was truthful. I said, I'm still bullish, but I'm not feeling as aggressive as I was, let's say, a month ago, right? I still feel like there's more upside to be had in this market, but it doesn't feel to me right now that this is the place to be like, taking some big shots, right? We got the new year coming up. Sometimes things change for no really good reason at all, other than it's a new year reset and new directions begin. So I said, I'm bullish, but I'm, conservative here. And so I had a couple trade ideas in mind that were of a little bit more conservative bent. And one of those trades that I brought to the table is I said, hey, I like this setup in Chewy. The analyst team had a report about Chewy this week, and I looked at it and I like it. It's not my favorite type of chart. In fact, if you have that chart, can you put it up of the Chewy chart? Do you have that ready or no? There it is. Boom. So I looked at that chart and I said, these are not my favorite setups to get bullish because, my favorite setup in the world is a stock that's, at 52-week highs or all-time highs. That's my favorite setup in a perfect world. Strazza will argue with me that these setups here have been working very well lately, and he's not wrong. It still doesn't change the fact that I don't like them. It's just, It's my preference. But so I came to the table saying, I kind of like this, but I'm going to go into a conservative. I like selling puts here. It's not a very aggressive bet, but as long as the thing doesn't roll over anytime soon, we'll get paid. That was my thinking. And then JC dropped a nugget to me that I was not aware of. He said, did you know that 25%-ish of the shares in this stock are short? And I was not aware of that. And I said, okay, wait a second. That changes everything. Because one other trade that I also very much do like is that whenever there's a stock that is starting to trend higher and it's got a large proportion of its shares held in short positions, boy, I love those trades because all those people that are short are losing money as the stock continues to tick higher. And the only way to make that pain stop is to buy stock to cover your short position. And if 25% of outstanding shares are held in short positions, that can potentially be tremendous fuel to send this thing much higher. Now, I wrote in my blog post about this piece. We ended up doing this piece, and I'll get into the details of how we traded this and how I still satisfied my my little conservative angle here. But I did write that, look, just because people are short doesn't mean I automatically want to take the other side, right? Short sellers, generally speaking, and this is not true in every case, and Strazza will probably back me up on this, but short sellers are smart traders. They do the work. They might do some of the hardest fundamental analysis out there, right? They've got very good reasons to have an aggressive short position, and I'm not disagreeing with any of their reasons. Yeah. The position that I'm taking here is that short sellers like me, like you, Spencer, like you, Strazza, they're human too. And they make mistakes. And if they're wrong, and if the market disagrees with their thesis, well, they're going to have to cover that position. That could send this stock much higher. So that's why I like this trade. This is why I got excited about it. I was initially thinking, okay, I'm going to be conservative. JC set me up to lay out my conservative thesis, and then he pulled the rug on me and threw this bone at me about how, look at this setup, we got this short interest. And so I'm like, all right, you're right. We got to be aggressive in this one. So here's how we played it. Spencer, if you want to go to the next slide, it's the option setup. What we did is, instead of just selling a naked put, which was my original thought, I was going to sell those June 2250 strike puts and get about 285 for them. If you, on that image you see on the bottom, it's that red box there at the bottom. I was going to sell those puts, get about 285 for them, and I was going to sail off into the sunset, hopefully. But getting more aggressive now, we said, because of that short interest, said, all right, you know what? Let's turn this into a risk reversal. Let's sell those puts as planned, but now let's take those proceeds at 285 and let's buy the 30 strike call also in June. These puts will pay for those calls, leaving me with about a 28 cent or a 30 cent net credit, which is the way I like to do risk reversals. But the wrinkle that I added, because I'm still a little conservative here, and it's still the New Year's right on the corner. And I don't know about you guys, but I've seen enough New Year's shenanigans to know that anything's possible come January 1st. And so what I did was, with that approximate 30 cent credit that was left over after I sold the puts and bought the June 30 calls, I took that 30 cents and I bought some January. These expire in 4 weeks from now, the regular January monthly options. I bought the January 21 strike puts. I paid 25 cents for them. And that put, all that does is just kind of gives me some defined risk from now until January. So if anything happens, if the short sellers turn out to be right and the rug gets pulled on the stock and it tumbles back to lows, these puts will offer some protection. Not full protection, but will offer some protection so that we don't get hurt too bad. And the reason why I like doing it in January is that with this trade, maybe go back to that first chart there, Spencer. If we're wrong in this trade, my bet is that we're going to be wrong very quickly. Like within the next 2 weeks, we're going to know that we're wrong. And I'm fine with that. And so having that protection through January expiration, which is January 19th for the exact date, having protection from now through January 19th keeps me, allows me to sleep well at night. after January 19th, then we just have the short naked puts and the long calls, but we should be moving higher from there. And then we'll just stick to our risk management level that we put in place. It's kind of hard to see on this chart because this is a longer term chart, but 2150 is the level that we're keeping an eye on. If Chewy can't stay above 2150, then I'm not willing to stick around and hope for higher prices. I'm just going to close the entire spread down, all three legs if they're still on.
2150, 2250, right, Sean?
No, 2150. 2250 is the strike of the short puts that I sold.
Okay.
But 2150 is the chart level that I'm keeping an eye on.
Got it. So you're gonna give it a little room to breathe. So the idea behind those January puts that you're buying is, we talk about this whipsaw hunting season. We talk about how it's not uncommon for them to come in January and reverse some of these trends. So if this thing gets, punched lower come New Year, that's the idea there, that protects us from that kind of a scenario.
Yes, that'll offer some protection for us. It'll define our risk so that we can't really lose more below 2150, which is the strike of those puts. The nice thing too here, Strazza, is that the true risk reversal part of it, those June options. I sold the June puts, I bought the June calls. There was a little bit of credit left over, so that credit paid for those puts. All in, the trade basically cost me zero. There was zero net cash flow out of my account to put this trade on, and so if neither scenario comes into play where, our stop loss doesn't get hit, stock just kind of trends higher, but it doesn't quite get to our long 30 call strike, and it just kind of meanders in that range there, that's not ideal. But in that situation, all of our options will just expire worthless, and we'll suffer no pains for that. Not even really opportunity cost. I mean, a little bit because we're holding short puts and there's margin requirement for that. But, we can't really get hurt. That's why below 2150 is where we definitely want to take action, because we could start getting hurt due to the short puts, where our risk is unlimited at that point, at least if it's after January expiration. But if we get to 30, Strazza, I wrote this in the blog post, the details. If we do get to 30, which if this thing starts following through on this whipsaw higher, 30 should be easily attainable. If we get there, Strazza, then I will sell half of my calls and also use those proceeds to cover all of my short puts, which will be really cheap in that scenario. Most likely I could probably cover those puts for, 25 cents, right? Sure. And then I'll have a free ride on the rest and with no risk in the trade. And who knows, maybe we make a run back up towards 50.
Nothing like playing with house money.
I mean, this is a fun one, Sean. Boy, you are good at what you do, my friend.
Well, let's see. My experience, Strazza, has been, we joke about this all the time, but the trades that you and I get really excited about,
they're not the best.
They don't always work out. It's the ones that we like, it's a coin toss. Those seem to be the ones that work the best. Who knows? And speaking of Strazza, have you noticed the chart on VIPs today? VIPS?
Oh, let's go. Is it go time? Yeah.
Oh, baby. It's finally moving for us.
Good.
Let's take a look.
That's that beach ball effect.
God.
It's up 5.5% right now, breaking out of that range finally.
Oh, dude, this one looks great.
Yeah.
I might need more calls.
Yeah, Strazza and I both got into this one. We did not get into this one
19?
for subscribers, but I'm in this one in my private account, and I'm liking it. I'm finally.
Since the summer.
Well, I didn't get in that recently. I got in more recently. I got in 2 months or like a month ago.
Yeah. Okay. That's right.
Yeah. Not even. I think it was like 3 weeks ago.
I've already lost money on this one once this year. Hopefully these work. I also like the 10-cent music. Have you been watching that one? TME. If China reverses, if China finds a bottom,
it's starting to, Steve.
I know.
These
stocks
been a couple days.
We talked about it a day or two ago that there would be a time and a place for these Chinese stocks.
It's been a couple days, yeah.
In China, watch the leaders. VIPS is 100% one of them. I mean,
Basically,
Tao looks good. They all look good.
Ever since whatever day it was it Friday? I think it was Friday when they came out with these new rules on video games. I think it was Friday.
Netties got destroyed. Oh, look at that disaster. 10 cents.
I was reading. Speaking of Chinese stocks, I was reading an article in the New York Times this week about Hong Kong and how it's like sliding down, falling down the freedom charts or whatever, the freedom weightings, and things are not looking very good. And I was like, yeah, man. Strazza and I were there. We felt it. It's real.
Yeah.
Sorry, that was a divergence there, but I thought you'd appreciate that.
Are you surprised? It's taken over. It got taken over by the Chinese a few years ago.
Well, it's sad because Strazza and I were there this summer, and man, what an amazing city! Like, wow.
I think, Sean, it was the prettiest city by far. That we went
by far. And like we could have spent the whole month just there exploring everything. It was crazy.
It was a blast. It is, yeah. It's too bad. That is what's going on there right now. And frankly, from a capital markets perspective, no bueno, not good. Something worth monitoring. Like Sean, I come on here and I always say, like, long term, I don't want these stocks. I don't want these stocks in my IRA.
Right. That's what I was just going to say. It's like knowing what we know about what's going on in China. Like I buy these Chinese stocks, like holding my nose. I'm like, oh, the rug could be pulled on these things at any moment.
Which is why I think the strategy that we continue to talk about on here of stick with the leaders, right? The ones that have looked good through this mess. That's, I think, the only way you could do this. We're not going out here and trying to sling JD calls or buy the falling knife that Alibaba has become. We'll see. 10 cents.
In fact, my grandma was born and spent the first 8 or so years of her life in Hong Kong.
Wow. When?
Hey.
Yeah,
when?
My mother was born in Tokyo. How about that?
There you go.
Look at you guys. It was the place to be, just a decade or two ago, they tell us.
Yeah, the 90s is when we should have been in Hong Kong.
It's a bull market in Hong Kong in the 90s.
Structural bull market for decades. All right, let's do some recess and get out of here.
So today in stock market TV history, JC heard too much Fed talk and walked right off the set.
I love it. Good for him. Good for him.
Walked right off the set.
I support JC's decision. Well done.
Oh, God.
Let's do some recess. All right, I'll start. I am officially booked, flights booked, going to Woodstock for Capitalists, going to Omaha May 2nd through the 4th, 5th, that
awesome.
weekend. For the Berkshire Hathaway annual meeting. Very excited for that. I've never been. Going with my dad. It's also his birthday. It'll be a good time.
Nerd Palooza. I love it. That's awesome.
That's a bucket lister. That's awesome. Good for you, Spencer. I'm jealous. Yep. That sounds like a blast.
All right, my recess is a couple weeks ago. You guys were talking. I think it was Strazza who brought it up. You said that man, there are so many terrible Christmas movies out there. All these new Hallmark. Was that you, Spencer? Okay, yeah. All these new terrible Hallmark Christmas movies, and I agreed with you 100%. Like there hasn't been anything good made since Trading Spaces, as far as I'm concerned. But anyway, that's the trader in me. However, we did find a new Christmas movie this year that me and the family loved, and I want to throw it out there. It was the new one with Eddie Murphy, believe it or not. Eddie Murphy's got a Christmas movie out.
The Candy Cane Lane.
Candy Cane Lane. Yeah. It held up. It was interesting. It was fun. There were funny moments. There was heartfelt moments. It was good. I'm not saying it's going to land in the category of Christmas Vacation, where it's like required watching every year, but I went in there with terrible expectations, thanks to the conversation we had here, and I expected it to be terrible, but I kind of liked it. Eddie Murphy for the win.
I'm going to check it out. That sounds good.
Speaking of new Christmas movies, it's not new, but I think it's a year or two old, and if you're looking for a new Christmas movie for the kids or a cartoon, Klaus, however you want to pronounce it.
Oh, we watched that too.
Excellent.
Very good. Very enjoyable film.
Animated.
Yeah, it was kind of like the behind the scenes of how Santa Claus started. That was a cool story.
According to one story.
Right.
It's true. It's true.
Oh, it's true. Okay. Yeah.
It's true.
Santa Claus still visits Strazza's house.
We got the options jam session with Sean. He's going to hop on at noon and find an options trade pretty much and talk through some of what he just said, but recap more of his recent activity. So that'll be at noon. We'll have Chat Request Live, Strazza, and myself today at 1 o'clock. Stay tuned for that. And of course, we'll be back tomorrow morning in what could be an abbreviated show for our last show of the year. We'll figure it out tomorrow. But that is our show for the day. Thanks to Blake. Thanks to Sean. Thanks to you. Thanks to Steve. Not thanks to JC. But
Screw that guy.
else, good job. Go make some money. We'll see you later.
I'm doing a Spaces at 10:15 with Jason Purrs. Come join us.
AM or PM?
No, 15 minutes.
Very nice, Sean.
Whoa.
That was fun.
I didn't do that. Did you do that?
What
No.
the hell was that?
I just put my thumbs up and then that happened. I have no idea how that happened. I didn't do it. Did you do that?
This is not the first time this has happened, by the way.
Do it
This
for
has happened
me.
before.
Do it
Run it. I can't take no loss. I don't even know what it costs. I hit the ground and I go